Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with my medium time frame bearish scenario where we are looking for a zigzag to the downside in a 535 where the most common target for wave C is between the 1 and the 1.236, which is between 27k and 26.3k. However, because this move to the downside looks very much like a zigzag, the only option left in a wave C, which still results in a 5-wave structure, is an ending diagonal. And in an ending diagonal, all the waves should be zigzag structures, which are 3-wave structures. So we are then looking for a 1, 2, 3, 4, and then eventually a wave 5 to the downside. The only thing is, with a ending diagonal, we will never make it to the common target of a wave C. We do have the rare target of a wave C being the 0.618, which is sitting at 28.1k, so that's something, but nonetheless, it is a rare target. In this scenario, we are then looking for a wave 1, as this move to the downside looks very much like a 3-wave structure, as we will see on the micro. So we then have a wave 1 zigzag, potential wave 2 in a double zigzag here, for then a wave 3 to the downside, then looking for 4, and then looking for 5, ending somewhere around that rare target for a wave C, for then a continuation to the upside. But around the 0.618, I don't have a great support. It is basically in kind of the middle of nowhere, one could almost say, because my first bigger support area is all the way down here, which is sitting between 26.8k and 27.4k. The only little bit of support that gets close to this particular scenario is the point of control of this volume profile range over here. You can see the point of control at 27.9k, but there's still quite a gap over here, and for price in a wave 5 to reach the point of control, this wave 3 has to be quite long and get close to the invalidation of a wave 3. The invalidation being the 1-to-1 that you see on the chart at 28,260, which is taken from the high to the low of 1 to the high of wave 2. If we then go to the bullish scenario, which eventually is bearish because we first go up and then move to the downside, then in this scenario, we are looking for a move to the upside in either a wave X or a wave B before then a wave C or Y to the downside. So in this scenario, we're looking for a bigger sideways structure, either an ABC 535 or a WXY in a 333. It doesn't really matter at the moment, but in this scenario, we are looking for X or B to not yet be finished. So we are looking at this expanding flat ABC as only the first structure of then a second structure and then eventually a third structure to the upside before continuation down. Now in this scenario, what is very interesting is that price locally caught the double bottom over here, took the liquidity for at least now a bit of support and a wick to the downside. Of course, it could go down lower, which you will see in the low time frame scenario coming up. But we do expect in this scenario a move to the upside where the triple top is incredibly interesting. We do have a resistance area between the triple top and where we are right now, which is first of all the little one just above price between 29.1k and 29.3k, and a little bit higher. We didn't yet touch all the resistance areas in this particular target box where we have a daily golden pocket and the highs over here between 30 and 30.1k, and then we get to the triple top. But by far most interesting is that area with the triple top, for then maybe a liquidity grab and a continuation to the downside. So this is definitely an area of interest for then prices to the downside, where in this scenario we would then be looking to reach this bigger support area between 26.8, 27.4, or even lower 26.2 to 26.5k. Now if we then zoom in to this scenario, this structure over here, I want to show you the low time frame options we have. So we are zooming in into the yellow wave X or wave B. So we are then looking for this being a 3-wave structure to the upside to then finish X or B and get towards that triple top area. Now in this low time frame, we have two scenarios. We have the WXY, which is more like a sideways structure, and the ABC as an expanding flat structure. So the first move over here is an expanding flat in either a wave W or a wave A. Both is possible. But then this structure to the downside, that is the question mark. So either we are going to get more of a sideways structure in a wave X for then a 3-wave structure to the upside in a wave Y, or you're going to get a deeper structure to the downside hitting the common target area for a wave B, and then a wave A, wave B expanding flat, and then you're going to get an impulse to the upside in a wave C for then the triple top and a move towards the downside. So the result is quite similar. It just depends from the low that we made with the confluences that we had over here. Daily naked point of control, double bottom. Does price have the strength to now move to the upside to the resistance area, time naked point of control at 29.475, daily at 26.7k, for then a rejection and a move down again, and then a three-wave structure like a WXY inside wave X for then a move to the upside? Or are we going to have the A, B, and then a wave C? Now below this low over here, below the low of this whole structure, there is not too much support. So if price would grab this low, the only option I would have is a potential swing failure pattern move where you take the liquidity, you close above, and then you move towards the upside impulsively, and then an ABC expanding flat. So this is something I'm looking for on the lower time frames. Very important to see if we can get the support more locally. If price goes too deep and takes this low, well, the next low is going to be the target basically. And then if we zoom in to this structure at what we have right now, and we are either looking for wave X or wave B, I color coded this so we then can look for the WXY in the green X for then a move up, or we are going to be looking for blue in a WX and then a Y to the downside, hitting the target area for then a move towards the upside. So if we first start with the green count, matching the bigger WXY scenario on the low time frame, then here we are looking for a three-wave to the downside in a wave W, followed then by a bigger ABC or a bigger WXY in wave X. So it is a three-wave structure where if we are looking for an ABC, which is an expanding flat, we're looking for the 1.618 as the most common target area for a wave C. A, B, impulsive C to the upside. This is the most common target area between 29.6k and 29.8k. However, you can also have this as a WXY, where then the target is going to be between the 1 and the 1.236, which is between 29.3k and 29.4k. Now, what is the big difference? A wave C to the upside should be a strong impulsive move towards the upside. At the moment it's slacking, right? Usually you want to see like a straight line to the upside. Wave Cs and expanding flats tend to be very fast, very quick moves to the upside, not much structure, it's like a straight line. So then you want to get to arrive in the 1.618 area relatively quickly. In a WXY, you can have like a three-wave structure to the upside. Like it's a slower move, takes more time to form, and then this is going to be the target area where we then do have at least some highs to be taken as well, but it is just below the confluences that we have. The time naked point of control is just above, while the daily in the wave C target area is very nicely in the middle of that area, very nicely positioned indeed. So in this scenario, you want this to be the low, and now find continuation. Also, the low was made inside the most common target area for a wave B, as well as a wave X that goes below wave W, which is between the 1.236 and the 1.38 taken from the low to the high over here. If we look at the other scenario, the micro blue, where this micro blue scenario again is in confluence with then a bigger ABC, A, three-wave B, and then a wave C to the upside. In this scenario, we are looking for this move to the downside to be part of a wave Y. So we then have a three-wave W, three-wave X, and now looking for a Y to the downside, where then the common target for Y is between the 1.236 and the 0.618. Most commonly is between these two, but the 0.618 is still a common target. So that is fine. The 0.618 is sitting at 28.7k and the 1.236 is at 28k. And you can see that on the low time frame, the common target for a wave B and then an ABC is the 1.236 to the 1.38, which is crossing the common target area for wave Y. So that is some nice confluence over there. The main thing is that how do we count this as a nice wave Y to the downside? So yes, we have a three wave in a wave W, we have a wave X, right? But putting this wave X on the right, on this pivot over here, gives us a problem, because if this is a three-wave structure, this is another three-wave structure over here, you now want to see upside and actually have wave X moving over there. instead, because this then looks like almost a two-wave structure. And if this is a three-wave and then a 1, 2, 3, it's like the last section is quite short in time, so it's not the nicest wave X. But also counting this to the downside as a wave Y, you now want to then count a three-wave structure to the downside. Now this over here does not look like a leading diagonal. The main reason being that wave 5 is longer, and then a 1, 2, 3, 4, 5. Wave 5 is too long in price. It is longer than wave 3, which invalidates a contracting diagonal on this time frame. So it can't really be an ABC to the downside as a three-wave structure. So it has to be something else. So there's still a little bit of like question marks on the micro, but that's also typical micro or counting like 15-minute. It's not always as clear what is happening on these time frames. Can wave X be positioned over here? Then you could be looking for this to be a three-wave impulsive structure. So you then have one finished, two still in the making or potentially already finished, and then a third wave to the downside in an ABC, where then this wave X has to be some sort of a structure like this in a WXY, and then you get another zigzag in wave Y. That means that this WXY scenario is then going to be a double zigzag pattern. Zigzag in W, anything in X, zigzag in wave Y to the downside, where then the most common target again is between the 1 and the 1.236, but a little bit less common, but still common, is the 0.618. If we look at the CVD divergences, we do have bullish CVD divergences, but as always, the more local CVDs have priority. Now this bearish CVD divergence already played out now as price took this low. So we had bearish CVD divergences between the high, lower high was made. These lows are the target. These have now been taken. So the bearish CVD divergences have played out. These ones also already played out as price took this low. So the one that is left now is the local bullish CVD that we have between over here this low and the higher low generated. But this is not really something that you like to see after seeing bullish CVD divergences, because this shows absorption of market longs, right? If we go to the CVD chart, you can find the template and everything in my end screen video and then in Discord. Then over here, you can see if I zoom out, you can see those bullish CVD divergence, higher low in price, lower low on yellow, right? Bullish CVD divergence. But have a look at the yellow line here, right? Let me quickly refresh and have a look at what's happening locally. Lower high on price, but a higher high on the yellow line. Clear, right? Lower high in price, higher high on yellow, which is a bearish CVD divergence. And what is important is that that is countering the bullish CVD divergence. So even though we have a bigger bullish CVD divergence, one can argue, because the distance between the pivots is bigger, more locally we are not seeing the same support. If you do see bullish CVD divergences more locally, that would be nice. That shows that very, very locally on the 5-minute, you also have market shorts being absorbed, as well as on the bit like higher time frame, let's say the higher degree pivots. But if you see bearish CVDs locally, well, even though we have bullish ones a bit higher up over here, if locally it's not being supported, it doesn't matter, right? There's still a probability for price to move to the downside. So we have to wait and see how that is going to develop more locally. Could this be a wave 1, 2 and continuation? Yes, but that very much depends on how price is moving to the downside and also the potential divergences that are going to be created. So if we then zoom out and we have a look at the probabilities of the different scenarios, then on the medium time frame, it's quite clear we are looking for downside. This is my more preferred scenario at the moment, mainly because the 3 waves to the downside with this diagonal are not looking that clean on the lower time frames. And also I think it would be brilliant to grab the triple top and a move down. The main question is, does price have the strength to go up here? And also, does it make people enter shorts up here instead of just moving to the downside and everyone that is trying to short is missing out, right? That's also a possible scenario where price is just like, see ya, you know. However, because of this 3-wave structure to the downside, it doesn't look probable for price to look for much lower prices in an impulsive structure. The diagonal is kind of like the only option, which doesn't go too deep, right? So that is something to consider, but I really like this scenario here, or at least, I mean, I can like it or not, but probabilities wise, from an Elliott Wave point of view, the probabilities are at the moment higher for this particular scenario. On the low time frame, it is therefore more probable that we will move to the upside for a wave Y or a wave C in either a sideways structure or a little bit more height to grab the triple top and then move to the downside. And on the micro, I think the green scenario at the moment is definitely one to keep your eyes on. So the more sideways structure is a bit more probable in my opinion. Even though we have the bearish CVD divergences, this scenario looks a bit better in my opinion. Also because if we go down and we take this low, then you really want to see a swing failure pattern low, because honestly there is not much support below this low over here. So the only way you can bounce is a swing failure pattern and then move to the upside. So that is something I keep my eye on in case this low gets broken. But yeah, the probabilities at the moment are, I suppose, more in favor for this being a 3-3 and then another 3-wave structure to the upside potentially, and then just range throughout the weekend as the weekend tends to do. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.